Hello and welcome to Forex.Academy, your #1 website for Forex and crypto education and analysis. In today's edition, we're going to be discussing fundamental analysis for novices, US Jolts job openings. In this session, we will be looking at the United States Jolts job openings. Jolts defines job openings as all the positions that are opened on the last business day of the month. The criteria is that a specific position exists and that there is work available for that position. If it's the first time you have seen one of our fundamental analysis videos for novices, we strongly recommend that you use an economic calendar every day if you are not already doing so. An economic calendar should act as your Bible in order to trade around it, while avoiding high-impact news and data releases which may have a negative impact on your trades. The key component of any economic calendar are the time of the release, the day and the date, the type of event, and the impact that any such data release will likely have on the market, which is typically low, medium, and high. We can see that the impact bar is displayed on various levels of impact from low, which is a light orange, to medium, which is a darker orange, taking up a third of the box, to the full red impact box, which means that the data release is likely to cause extra volatility upon its release. Most economic calendars will also show you the previous period's data release, which might be a weekly, monthly, quarterly, or annually, and also generally consensus of where market analysts believe the data statistics will be upon its release. Then we have the actual release data, which will be populated upon the release of the data. Most brokers will provide this information almost instantaneously to help your trading decision making. Here we can see an example of the US Jolts job openings for June 2020, which was released on Monday the 10th of August and came out at 3 p.m. BST, and where we can see the various data details, including May's release of the forecast consensus, the actual number of 5.89 million, which was higher than the consensus and higher than the previous for May. Although the impact bar for this particular news release was set to low because of the implications of the virus fallout, especially within the United States, which has suffered a huge economic collapse and massive unemployment, the market will be looking for any signs that jobs are rebounding. This is a positive sign that job openings are appearing on the market. This means that the United States companies are confident that they are recovering from the pandemic and that they are growing to a certain extent, needing extra labor and manpower to fill those vacancies which have been created with those organizations. Typically, an increase in openings is good for the United States economy, and therefore you might expect that the US stock indices will increase, and where this is also good for the US dollar. However, when we see that the job openings are lower, this would be bad for the United States economy and also bad for the US stock markets, as well as the United States dollar. Right now, we should not take for granted even low impact news from the US. At any normal time, we might experience a muted response from the marketplace. Sometimes even low impact releases can cause extra volatility, and you should bear that in mind, especially until such time as the pandemic has gone away and things have returned to normality. If you enjoyed the video, then please like and subscribe, and leave a comment down below about anything you would like us to discuss in future, or if you have any questions about this particular video. Have a great day.